What we're witnessing today is not the collapse of a market, a currency, or a nation, but the quiet failure of the standard humanity has relied on to define value itself. For centuries, value has been anchored to objects, authorities, and abstractions that demand trust. Trust that gold is pure, trust that money will not be overissued, trust that layers of financial promises will eventually resolve into something real. Gold, fiat currencies, bonds, and complex financial instruments differ in form but share the same structural weakness. None of them can prove their value without assumption. As the cost of verification rises, these systems strain under their own weight. Counterfeit metals, paper gold expansion, debt saturation, and escalating audit and compliance costs are not isolated problems. They are symptoms of a deeper breakdown. History shows this pattern clearly. When silver served as the standard, debasement followed. When gold became the anchor, its internal unverifiability and custodial concentration became liabilities. When fiat replaced gold, unlimited issuance and debt accumulation became unavoidable. Each time, society blamed the asset, but the asset was never the true failure. The failure was always the standard itself. Whenever a standard depends on physical inspection or institutional authority, it eventually reaches a scale where verification becomes impossible. At that point, humanity has never successfully repaired the system. It has always replaced the standard. This is why comparing Pi network to traditional assets fundamentally misunderstands its purpose. Pi was never designed to store value like gold or demand belief like fiat money. Its architecture follows a different logic altogether. Contribution creates a record. The record is verifiable, and verification grants access and usage rights. Pi does not attempt to generate value through scarcity or narrative. It measures contribution, human time, effort, coordination, and participation. That is the defining feature of a unit of measurement, not a speculative instrument. Measurement removes debate. It replaces trust with proof. And once a system can reliably measure contribution, the question of value shifts from opinion to record. This is why Pi evolves from being perceived as an asset into becoming a reference system for all assets, and ultimately, for economic meaning itself. A true unit of measurement must satisfy strict conditions. It cannot be forged or duplicated, the cost of verification must approach zero, and subjective interpretation must be eliminated. Gold fails these conditions because it cannot be fully inspected at scale. Fiat fails because it depends entirely on authority and belief. Pi succeeds precisely because it does not attempt to represent physical matter directly. Instead, it records the inputs that give matter economic relevance in the first place. When contribution becomes measurable and verifiable, assets reorganize naturally around that standard. Gold, labor, services, energy, infrastructure, and information can all be evaluated through a single coordinate: how much verifiable contribution was required to produce or sustain them. This reframes the meaning of the grand open Mainnet. It is not the release of another tradable token, nor an invitation to speculative excess. It marks the moment a trustless measurement standard begins operating in reality. From that point forward, markets begin prioritizing utility over narrative pricing, institutions adapt to verifiable contribution rather than assumed credibility, and systems that once demanded belief are replaced by systems that require no faith at all. This transition does not begin in finance, it begins in measurement. Common questions, whether Pi will replace gold, money, or nation-states, miss the direction of change. When standards shift, existing structures are not destroyed, they are reassigned roles. Gold returns to being material, money contracts into a transactional tool, and states revert to administrative coordination. Above them, a single neutral standard remains, resistant to manipulation and independent of authority. We are entering the end of the age of assumed value and the beginning of the age of measured contribution. In this age, value no longer needs persuasion, trust no longer needs enforcement, and belief is no longer required. What matters is what can be recorded, verified, and compared. Once such a standard takes hold, debate ends, because the central question is no longer what you claim to own, but what you have verifiably contributed.